Hey, if you're expecting a baby right now or you're merging your finances with your partner, I want to walk you through something today that trips up almost everyone in your situation. And it's genuinely not your fault when it does. We're talking about insurance. Specifically the stuff that nobody explains to you until you're already holding a bill that you didn't expect. I'm going to cover a few different scenarios today, so if one doesn't apply to you, stick around because another one might. Let's get into it. Let's start with the baby side of this. Here's a number that blew my mind when I found it. Based on 2019 data, 1 in 5 families who delivered at an in-network hospital still ended up with a surprise bill anyway. And not because they picked the wrong hospital. The median bill was around $744. And for a third of those families, it was over $2,000. And costs have only gone up since then. So if anything, it's probably an understatement of what today looks like. So why does this happen? It's honestly pretty maddening. The two biggest culprits are anesthesia during delivery and NICU care if your baby needs extra help after birth. Both of those are moments where you literally don't get to choose who cares for you and your baby. You picked the right hospital, you did your homework, but you still got a surprise bill because you didn't choose which doctor walked into your room. Now, is there protection here? Some. The No Surprises Act covers a lot of this. If you deliver at an in-network hospital, providers like anesthesiologists generally can't bill you more than in-network rates, even if they aren't personally in your network. That law exists because it was common enough that people fought for it and won. But here's what you can actually do on your end, beyond just hoping that the law covers you. Ask your hospital, is everyone involved in my delivery in-network? Not just the hospital itself. That includes the anesthesiologist, and if your baby might need NICU care, ask about that too. Get the answer in writing if you can. Email is enough. It won't guarantee nothing goes wrong, but it means if something does, you have documentation and you're not finding out for the first time when the bill shows up. Now, if you're not having a baby, but you are merging your finances and your life with a partner, there's a version of this that hits you too, just less obvious. A lot of couples combine onto one insurance plan because it feels like the obvious move. You're already merging bank accounts, a lease, or a mortgage, so combining insurance just seems like it should be on that same list. And a lot of the time it does save money. But here's what nobody warns you about. Switching plans can mean losing access to your current doctors without even realizing it until you're already there, sitting in a waiting room, being told that you're out of network. And when that happens, it's not a small difference. Based on data from 2017 to 2021, going out of network for a procedure costs $1,042 more, which is more than double what the procedure would have cost in network. That is not a one-time inconvenience, that is real money, and for something that you didn't even know you were risking. So here's what you need to do before you combine plans and not after. Before you switch, look up whether your current doctors, your primary care provider, any specialist you see regularly are actually in the new plan's network. Don't assume, make sure to double check. And if you and your partner have really different healthcare needs, say one of you sees a specialist regularly and the other one almost never goes to the doctor, it's worth running the numbers to see if it's cheaper to stay on separate plans than to be on the same plan. In that particular situation, it may not be cheaper to combine plans. One more thing worth knowing is that if you recently got married or had a big qualifying life change, you typically have a 60-day window to make insurance changes without waiting for open enrollment. If you miss that window, you will be stuck with your current setup until open enrollment, which could be months away. Okay. Let's talk about 3 words that get thrown around like they're the same thing, but they're really not. Deductible, copay, and coinsurance. Mixing these up is one of the most common reasons that people get blindsided by a bill. So let's make this really clear. Your deductible is the amount that you pay out of pocket before your insurance starts covering costs at all. So if your plan has a $2,000 deductible, you're paying the first $2,000 of care yourself, full price, before insurance kicks in for most things. But there's an important exception. which is preventative care. Under the Affordable Care Act, most private insurance plans have to cover certain preventative procedures at no cost to you. No deductible, no copay, no co-insurance, even if you haven't met your deductible yet. That includes things like your annual physical, most vaccines, cancer screenings like mammograms, and if you're pregnant, it covers most prenatal visits, along with screenings for things like gestational diabetes and preeclampsia. So if you're expecting, a good chunk of your routine prenatal care might actually be fully covered before you've even paid a dime toward your deductible. It's the non-routine stuff, like complications, extra testing, and the delivery itself, where the deductible applies. A copay is a flat fee that you pay for a specific type of visit, regardless of the total cost of the visit. So maybe your plan says $30 for a primary care visit and $50 for a specialist visit. That's what you owe for that visit, no matter what the full cost of the visit was. Coinsurance is where people get tripped up the most because it's not a flat rate, it's a percentage. Once you've hit your deductible, your insurance starts covering a percentage of costs, but not all of it. A common setup is 80-20, meaning your insurance covers 80% and you cover the other 20%. And that may not sound bad until you attach it to a large bill. Let's do a real example. Say you've already met your deductible and you have a procedure that costs $10,000. With 80-20 co-insurance, your insurance will cover $8,000, but you will have to cover the other $2,000. And if that visit also comes with a copay, say $50 for the specialist visit itself, that gets added on top. It is not replaced by the co-insurance. So your actual total could be $2,050, not just the $2,000 co-insurance. So here's the takeaway. Your deductible is what you pay before insurance pays anything at all except for preventative care, which is usually free regardless. Your copay is a flat fee for routine visits, and coinsurance is a percentage that you're still responsible to pay for on bigger costs, even after your deductible is met. And sometimes even all three will apply at the same time. Knowing which one applies to which situation is the difference between guessing what you'll owe and knowing what you'll owe. So now that you know deductibles, copays, and coinsurance, let's actually put real numbers to what pregnancy and delivery cost, because the number that people usually throw around isn't the full picture. Based on 2021 to 2023 claims data from the Peterson KFF Health System Tracker, the overall cost of pregnancy and childbirth for people with employer-sponsored health insurance is around $20,416. Now that's the total cost of care, most of which your insurance will cover. The piece that actually comes out of your pocket after insurance averages around $2,743. Now that number changes depending on how you deliver. A vaginal delivery averages $2,563 out of pocket, while a C-section averages $3,071. A C-section will have close to $28,998 in total cost, whereas a vaginal delivery will have roughly $15,712 in total costs. Now remember what we just covered. A lot of your prenatal visits themselves, the routine ones, are covered as preventative care, so they might not cost you anything directly. Where the real costs show up is the delivery and anything beyond routine. And if your baby needs extra care after birth, that adds on top of everything. Nearly 10% of newborns end up needing NICU care, and those babies rack up over 5 times more in healthcare costs over the first 2 years of their life than babies who don't. So here's the practical takeaway. Don't budget around the $20,000 headline number. That's not what you're actually going to pay. Budget around your specific plan's deductible, your out-of-pocket maximum, and realistically, something in the range of that $2,743 average. Understanding that it could be higher if you have a C-section, or if your baby needs extra care after birth. That's the number worth having a real plan around, not the big scary total. The number that is actually going to hit your bank account. Okay, one more piece that ties everything together. And honestly, this is the part that should make it feel a little bit better after everything we just covered. Your out-of-pocket maximum. Here's what it is. It's the absolute ceiling on what you'll pay in a plan year for covered in-network care. Once you hit it, your insurance covers 100% of everything else. No more deductible, no more copay, no co-insurance for the rest of that plan year. It's the safety net under everything we just talked about. For 2026, individual out-of-pocket maximums on marketplace plans are capped at $10,600 and $21,200 for a family. That cap is going up again for 2027 to $12,000 for an individual and $24,000 for a family. Employer plans vary a bit in design, but must follow those same federal limits or land below them. Let's put this together with everything else that we've covered. Say your plan has a $2,000 deductible, and after that, 80/20 co-insurance, up to a $10,600 out-of-pocket maximum. You have a delivery that ends up needing some extra care. Your total cost lands around $40,000. You pay your $2,000 deductible first. Then you're paying 20% co-insurance on the rest. And normally, that could keep climbing alongside the bill. But once your total out-of-pocket spending, deductible plus co-insurance plus copays, meets that $10,600 out-of-pocket maximum, you're done. Insurance covers everything else for the rest of the year, no matter how high the total bill goes. So even in a worst case scenario, an unexpected C-section, a NICU stay, and complications that nobody planned for, there is a number that you cannot go past. That is genuinely useful when you're walking into a year with a lot of financial unknowns. The one thing worth double checking on your plan is whether your out-of-pocket maximum is per person or for your whole family combined. This actually matters a lot once there's a baby involved. Since family plans are required to have what's called an embedded individual limit, meaning that even on a family plan, no single person, you, your partner, or your baby can be forced to pay more than the individual out-of-pocket maximum, even if the whole family hasn't hit the family max yet. Here's the one thing that I want you to walk away with. None of these situations happen because you were careless. They happen because nobody hands you the list of questions to ask before making a decision that feels routine or completely out of your hands turns into a bill that you never saw coming. This is exactly the kind of thing we work through together in a session, catching stuff like this before it costs you. If that sounds helpful, I've got a free 30-minute discovery call, links below.